Hello friends, this is Raj Sastry from Raj Option Trading. Today is August 21, 2021. I want to cover heavily shorted stocks and also let's see how to benefit from them. With that, we'll cover headline news, heavily shorted stocks, how to spot these good stocks, and also review a few charts and see what we can buy right now. With that, let's get started. So from a top headline news perspective, we have a news here, best meme stocks to buy or sell. So we got Paysafe, Wendy's and Tesla. I like many of these, mainly stocks like Paysafe and Wendy's. They are not too hot at this time. You could buy some. And also Tesla is also coming down off late. You could buy some Tesla also. And here we got a few top meme stocks, Tilray, Bed Bath and Beyond, and Beyond Meat. The key to buy these stocks is really look at when they are a little bit oversold. RSI is below 55 or 50, and then slowly buy them. And then we got here top meme stocks on Reddit. We got AMC, GameStop, Wish, SoFi. And SoFi is very interesting right now. Stock has come down, pulled back hard. I think it's a good one to buy at these levels. Then we got here 10 meme stocks. You can see Pubmatic, Clover Health Investments, Neo, and Viacom, and Clean Energy. And I think many of these stocks are in a good level to buy at these levels. We can look at the stock charts and also see what we can buy at this time. We got here 7 ready stocks to buy. So we got Clean Energy, Clover, Lucid. Lucid is an interesting play. Lucid is supposed to be Tesla killer. I think this one is good to buy slowly and accumulate. And then we got Tilray, Wish, Workhorse, XELA. I think we'll look at many of these stocks and see what to buy at these levels and take it from there. So here we got heavily shorted stocks. At the top of the list we got BBIG Vinco, a $2 stock, 51% short as you can see here. Very low market cap though. Then we got support.com, again a great stock, right now 39% short. Then we got Workhorse, EVFM and so on and so forth. And also we got more here, Meta, Clovis and so on and so forth. What we'll do is we'll look at many of these stocks in little more detail, look at some numbers and see what's good to buy at these levels. So we got here page 1 of 100 heavily shorted stocks here. Top of the list is BBIG Vinco. Vinco is a $2 stock as you can see here. Market cap is low, just 143 million. And as you see here, institutions are buying this BBIG stock. So that's a good sign here. And they also have some sales. If you're a fundamental investor, you should not probably buy this because sales growth is low or a negative at this point. There is some gross margin. Net margin is also negative. So if you are a trend trader or if you want to look at some of these meme stocks and buy, and if you want to be quick on your feet, you could buy BBIG. But if you're a fundamental investor looking at fundamentals of the company, probably this one is not for you. With that reason to buy BBIG or Vinco is, as you can see here, stock has been falling off of late big time in 1 week, 2 week and so on and so forth. But on Friday, stock has come up. It's a 9% up in 1 day. So that's why at this time it looks like this stock is turning around with the RSI 32, the indicating stock is oversold and stock is turning around on Friday. You could buy the stock on slowly on the down days. Given there is a high short ratio, any good news will make the stock go up. And also mainly the reason I like this stock right now is institutions are buying this stock, 43% institution purchase. That's a good sign. And then we got here support.com. Support.com, probably I would wait for the down days. As you can see here, RSI is 65. That tells you got to wait a little bit. Given the stock has gone up so much, in the last couple days. It's good to wait. But regardless, I love support.com. It's a great stock, is doing very well. Small company, everybody needs to provide support from home-based employees to everywhere else with the COVID environment. With that, support.com has a good solution. It can help workers to provide support from home. And then you got here Workhorse. I think Workhorse is also same similar category here. It's an electric vehicle play, $8 stock, very low price at this time. But if you look at what it's doing here off late, it's trying to turn around in on Friday. That's why stock is oversold completely. Given RSI is 30, but there is some turnaround in play. One note of caution on Workhorse is right now price to sales ratio is 100 plus. That tells you from a valuation perspective it's a little pricey even up here. And then we got a couple more here, EVFM, Blink, and so on and so forth. The one I highlighted in a gray background here, those are the ones you can look at. Those may be the candidates for any short squeeze type play. As an example, here you got, the reason I highlighted many of these is they have got, they have shorter term positive indications here, as you can see here, even though they are off in the longer term, like 1 week, 2 week, and so on and so forth. On Friday, they showed some progress here. That's why you could buy slowly and accumulate. Many of these EV play, electric vehicle play, looks like they're turning around slowly. And given there is a lot of subsidies and government credits, they can do well in second half of the year. Then we got here SmileDir stock is completely pulled back. Now they're showing some progress here. I think this one is also good to slowly accumulate and go from there. And we got Tattooed Chef, Meta, same story in both stocks. Tattooed Chef is turning around slowly. Meta, on the other hand, as you can see, institutions are buying Meta. That's why institution ratio is high, but stock itself is getting sold, as you can see here, completely pulled back. That's why it's good to buy some Meta at these levels and take it from there. Clovis Oncology, as you can see here, there is some improvements in the shorter term. That's why you could buy some Clovis at these levels. And same story with Heron, Riot, Ocugen. There is some improvements here. I would buy them on any down day and accumulate slowly. And same story, GoodRx. GoodRx is trying to turn around here. RIOT blockchain. RIOT blockchain is also a great stock. I would buy this on any down days. Crypto is going up and down of late. You could buy this on down days and benefit from crypto bouncing up and down. We got a couple more here. AppHarve, Nikola, Romeo, XELA, same story. There's some improvement in the shorter term, even though stocks have been selling off late. So that's the page one. We got page two here. We got a couple more here. As you scan through here, I've highlighted few stocks for you, like Root, YALA, Fastly, one of my favorites. API, again a great stock. And SoFi is a good stock to buy at these levels. It's a fintech play. Stock has been selling off. As we see here nearer term, there's a small improvement in last Friday. So I would buy some SoFi at these levels and accumulate. And same story with Clover Health, great stock, very low price stock. There is some improvement in last Friday, could be a sign of turnaround. And I got few more here like GBT, Kala, Fisker, Solo. So I like Solo at these levels. It's a EV play. And we got Innovio, SFT, Lucid. Lucid could be a good one to buy at these levels and accumulate slowly and take it from there. And we got famous meme stocks like Bed Bath and Beyond Meat. Both of them are showing some improvements in the short term time frame. So with that, let's look at the next chart here quickly. I've got few stocks here. For example, Skills is showing some improvement in the nearer term. Stock has sold off, as you can see here, completely. Now it's showing some improvement. I would buy some Skills at these levels and hold for a while. And same story with Ring Energy, very low dollar stock, $1.97. and market cap is also low, showing some improvements here. You could buy slowly and accumulate. We got here a couple more: WTRH, GoTo, GTR, GTHX, CPE, and UAWS. GoTo looks like it's turning around slowly, as you can see here. There is a little bounce back. This stock is completely pulled back and tumbled, as you know very well. This is a Chinese online education play. After China said you can't make money off of K through 12 students, that's why all these Chinese education, online education stocks have come down to earth. So at this point, it may be okay to buy some GoTo slowly. At these levels, I'm sure they will reinvent their business model. And then we got a couple more here: ZIOP, even Aurora Cannabis. At this point, they're trying to bounce back, as you can see here. Good to buy at these levels. And then we got Voya Financial, same story, trying to bounce back here. And we got Excel and Real. On Real though, it's not bouncing back, as you can see here, but stock is completely sold off. I think this will come back slowly. I think you should accumulate Real at these levels. And we got ICPT. ICPT is also same story. If you're a contrarian investor, you should buy some ICPT at these levels and invest for long haul. A good thing about ICPT is fundamentally there is a sales growth here. As you can see here, 1 year growth, quarter over quarter growth, good sales growth, nice gross margin. That's why stocks like ICPT, it's okay to take advantage and accumulate at these levels. We got one more page here. As you can see, we got some of these great stocks. I also love Velodyne at these levels. Stock has been selling off, as you can see here. Fubo, Sorrento, IIVI, one of my favorite stock at these levels. I would buy IIVI at these levels. We got Microvision, Woozy, same story. Stocks have been selling off. There is some improvement in the shorter term. And with Vivo, SunPower, Groupon, I think it's very intriguing at these levels. I would buy some Groupon at these levels and hold it for a while. And Chewy, it's a great stock, pet stock. As you know, a lot of people buy pet food from Chewy. Stock has been dropping off like big time. I would buy some Chewy at these levels. This company will do well. It's also a fundamentally strong company, evidenced by 1 year sales growth and quarter over quarter sales growth. And then you got your QuantumScape, IVR, even Virgin Galactic, Richard Branson's company. I think stock has been selling off late, with Richard Branson selling some of his own stock here. But now there is some sign of turning around. I would buy some Virgin Galactic at this time. Richard Branson always makes some big splash and stock goes up. And Jumia, I like Jumia. Jumia is a e-commerce play. I think this stock is really sold off completely. At these levels, I would accumulate Jumia. I think this company will do great. Right now, it's trying to turn around. And Metromile, this is into insurance company. Many people want to pay for insurance based on the miles driven. I think this is a great company. I would buy Metromile slowly. This company will do well in the long run. So we'll look at a few companies in a little more detail and look at the charts and see how to spot some of these stocks and what we can buy now. So with that, let's look at BBIG. BBIG, it's as you talked about earlier, it's Vinco Ventures. A $2 stock here, $2.40. As you look at the chart here, earning stock went sideways, earning did nothing. One more earning, stock went up. Now stock came down. Now it's showing some signs of improvement. So as you look through the on the balance volume here, on the contrary, even though stock is falling here, on the balance volume is improving. That means people are taking advantage of the stock falling and they're really buying the stock. So whenever this happens, this tells you there are more buyers than sellers. Especially given the stock has got a high short ratio, if more and more people are buying it, shorts will end up covering their shorts and they will also start buying. That's why if you're shorts, if you want to take advantage of high short ratio, look for this type of pattern where stock is coming down but on the balance volume is going up. That tells you this can create a short squeeze, especially when the stock is falling down. It can only fall so much. If everybody starts buying the stock, that will create short squeeze. So this is a good pattern if you want to take advantage of short squeeze type scenarios. And then we got Workhorse, similar pattern as you can think about. Right now stock is below its long-term 200-day moving average, which is the red line here. It's trying to bounce. It's even it's below all the moving average at this time. Clearly bearish indication when it comes to this stock here. But if you look at the on the balance volume, on the other hand, people are really accumulating this stock big time. That tells you, this is again a divergence. Even though stock is falling down, on the balance volume is going up and holding steady. This is one of the candidates that you can buy and accumulate and wait for a short squeeze because of this high volume. People are buying into the stock. And then we got here Blink. Blink owns, operates, and provides electric vehicle charging equipment. I think this will be good with the President Joe Biden's infra bill. This company can take advantage. As you can see here, this company is trying to bounce off of its 200-day moving average, which is the red line here. Even though stock is kind of coming down a little bit, on the balance volume is steady. That tells you a lot of people are buying into this stock. Because there is a high short ratio with Blink, as you can see here, short ratio is 34%. This can also create some short squeeze on any good news on the company. And then you got here TTCF Tattooed Chef. I think stock has come down big time after the earnings. As you can see here, it's a plant-based food company. And as you scan through here, even though stock is coming down, right now it's trying to go up. On the balance volume is also trying to go up. That's why, I would buy Tattooed Chef at these levels. As you can see here, Tattooed Chef, right now there is no sales growth, but there is a gross margin here. So I would buy slowly into Tattooed Chef into this weakness here. Next we'll look at a couple more here. First one is Meta. Meta, it's a smart materials and photonics company. Invents, designs, develops and manufactures various functional materials. As you can see here, this stock has come down drastically, as you can see, but on the contrary, on the balance volume is going up. That's a divergence. As you can see here, price is coming down but on the balance volume is staying steady. This tells you there are a lot of people buying into this Meta. I would buy with them and hold it for a while. And as you can see here with Meta, we got institutions buying Meta. That's a positive sign here. They also have got nice gross margin. So with that, I would buy into Meta and hold it for a while. We got here Clovius. Everybody knows Clovius Oncology. It's a cancer type stock. They got acquiring, developing, commercializing anti-cancer agents. Stock has been falling off big time, but if you look at the on the balance volume, holding pretty steady. So this is one of the favorite meme stocks. This keeps making news. So with this weakness, I would buy some Clovius and hold it for a while. As you can see here, they don't have any good sales growth, but institutions are buying into it slowly. Insiders are selling a little bit, which is expected. So with that, there is a small bounce back in the one-day chart on last Friday. I would buy some Clovius Oncology into this weakness here. Then we got Heron Therapeutics. These guys are into developing treatment to address unmet needs, especially I think into chemo and vomiting sensation after the chemo. I think this is a good stock. Stock has been falling off big time with all these biotechnology companies early stage. they tend to fall off, at times. It's a good time to buy when they're down like this. With Heron, I could see stock is improving the nearer term, even though stock has sold off all the way in the longer term. So I would buy some Heron at these levels, even though on the balance volume is indicating stock has been selling off of late, volume is low, but there is some indication that volume may pick up as we go forward. It could be good to buy ahead of volume picking up and hold a nice position here. And then you got Ride, which is again develops, manufactures, sells endurance and electric pickup trucks here. I think it's a okay company right now, completely bearish as you can see here. It's below its 200-day, 100-day, 50-day, all the moving averages. Tells you completely bearish right now, and earnings has happened already. On the balance, volume is getting stabilized now. That tells you folks are trying to accumulate at these levels. It's good to buy at these levels. And there is some improvement in 1-day chart here, which tells you there may be some semblance of turnaround. We got a couple more here. AppHarve, it's a development stage company, builds, operates high-tech greenhouses to grow fruits and vegetables. Stock has been falling off of late. Right now, it's a bearish territory with a 200-day moving average at the top, then 100, then 50, then 25. Typically in the bullish stocks, this will be completely reverse because it's bearish. We got longer term moving average on the top. So with this, stock is completely sold off after the earnings, and on the balance, volume is trying to pick up. So at this time, it's okay to buy some as volume is picking up. You can be ahead of the curve and buy some AppHarve at these levels. And as you see here, insiders are selling it, institutions are buying it slowly. So I would buy some. I think 1-day chart stock is showing some strength. That could be a sign of turnaround. And then we got Nikola here. Nikola is an infamous EV stock, as many of you know. As you can see, it's one of those famous meme stocks. So at these levels, looks like folks are trying to buy into Nikola, evidenced by on the balance volume ticking up a little bit here. I would buy some Nikola, not based on the fundamentals, but based on the technicals here. There may be a chance this stock can go up because folks are buying into the stock, evidenced by on the balance volume going up here. And as you'll see here with Nikola, there is also a small bounce in 1-day chart. And then we got Romeo here. They're into lithium ion battery for EV. Stock has been doing nothing for a while. They also had their earnings. On the balance, volume is pretty steady, ticking up a little bit. That's why I would buy some Romeo at these levels. And stock is also bouncing back slowly in the 1-day chart. And we got XELA here. XELA is into transaction processing solutions. They are into healthcare, legal and loss prevention services. This stock has been selling off of late, but look at the on the balance volume here. On the balance volume is keeping steady. That tells you all our meme crowd, they are buying into the stock, taking the volume up. This can result in the short squeeze. That's why I would buy some XELA at these levels, and there's a small improvement in a 1-day chart. The moment you see this type of pattern here, stock is falling off, but on the balance volume is keeping steady or going up. That's the sign that tells you, hey, you know what, watch out, this can cause a short squeeze. As usual, don't put all your money in one stock. Buy a couple of stocks so that way you got some diversity and you're not stuck with one stock. We got a couple more here. First is YALA. YALA is a voice-centric social networking and entertainment platform. As you can see, your stock has been trading sideways to down for a couple of quarters here. But right now there is some positive indication. We got a lower moving average, 200-day moving average here, and 100. As you can see here, I think there is some positiveness. As you can see, stock is trying to bounce off in a short-term 1-day chart here. On the balance, volume is trying to tick up slowly. So at this time, it's okay to buy some YALA at these levels and hold it for a while. Next, we got Fastly. So this is supposed to be a fast growing stock. It's a edge cloud platform that helps with the internet processing content delivery network. Right now stock is in a bearish territory, as you can see here. They also had their earnings a while ago, and right now completely bearish with a 200-day moving average on the top and 25-day moving average at the bottom. So as you look at the Fastly here, this has got fundamentals. It's got a good sales growth here and good gross margin. That's why stocks like Fastly, it's okay to buy slowly into this weakness and hold it for a while. So right now on the balance, volume is a little bit lower. That tells you this stock is not getting enough love from Wall Street. So that's why as a contrarian, you should buy some of the Fastly and hold it for a while. Next, we got API. This is China's Studio, as we call it. It offers developers with software tools to embed real-time video, voice, and messaging. Stock has been falling off of late with the Chinese crackdown, and we already had the earnings, as you can see here with the light bulb. So API is a $27 stock. It's got a positive sales growth, as you can see here. Fundamentally, it's a good company. Stock has been selling off. There is some improvement in the shorter term. So on the balance, volume is also going down as stock is going down. So it's okay to buy at these levels here. It's ticking up slowly here. It's okay to buy and hold. Then we got SoFi. SoFi is a fintech play. They got this lending, financial services, and technology platform. Stock is completely sold off after the earnings, showing some signs of improvement here. And even on the balance, volume is completely came down. Now it's ticking up. So at this time, it's good to buy SoFi at these levels. It's a great stock. I'm sure it will come back up again. So with that, let's look at a couple more here. We got GBT. It's a global blood therapeutics, $27 stock. Stock has been falling off of late, as you can see here. And there is some improvement on Friday. Earnings is also done. So with this, on the balance, volume is ticking up. I would slowly buy this stock. Don't expect the stock to go high sooner, but I think this will do well in the longer term. And as you can see here, this is also a fundamentally good company with the positive sales growth here and nice gross margin. And we got KALA here. KALA helps with the treatment of eye diseases with their proprietary technology. Stock has been falling off, as you can see here. High short ratio, which is 21%. They also have positive fundamentals here with the sales growth and nice gross margin. On the balance, volume is also low. At this point, is trying to see where to go. I would buy some KALA at these levels. Stock is completely sold off. Next one is Solo. Solo is the company that creates, they have EV electric vehicles, and their flagship is a one single seat vehicle. That's why it's called Solo. As you can see, a stock has been not doing great last couple of quarters. This used to be a high flying stock earlier. Right now they got positive sales growth. And one thing I like about Solo, even though stock is selling off, there are a lot of people buying into the stock. That's why this stock clearly can create a short squeeze and go up on any good news here, indicated by steady on the balance volume, even though stock is not doing great. So with that, I would buy some Solo at these levels and hold it for a while. And then you got SFT here, end-to-end commerce platform for buying and selling used cars. I think this used car market is pretty crowded at this time. We got a lot of players doing the same thing, including Carvana, even Lithia Motors with their drive away brand. A lot of folks in this area. Stock has been selling off, as you can see here. Right now it's a negative, and on the balance, volume is also dropping off. So with that, as a contrarian, I would buy some SFT at these levels and hold it for a while. Right now, there is no fundamentals as you can see here because it's an early stage company, but I would buy some SFT at these levels and hold it for a while. So we got one more here, probably the last page here. So we got Skills. Skills provides mobile games platform, connects the players worldwide. And as you can see here, stock has not done much of late. It's a SPAC while ago. Right now, stock is selling off. As you look at the on the balance volume, it's trying to improve at these levels. So at these levels, it's okay to buy skills slowly. They got institutions buying into the stock as you can see here. And gross margin is good, 95%. It's a software and a recurring revenue gross margin. So with that, I would buy some skills at these levels, completely oversold. RSI is trying to tick up at these levels. Then you got GTHX. It's a Heron Therapeutics. Stock has been selling off big time. They're into discovery, development, commercialization of small molecule therapeutics, into cancer treatment as you can think of. Stock has been selling off. Right now it's a negative territory. On the balance, volume is also going down, but it's ticking up slowly. I would take advantage of this and buy some Heron Therapeutics. Right now, as you can see, there's some good fundamentals. Quarter over quarter growth is good. No gross margin right now. So I would buy some Heron Therapeutic at these levels and hold it for a while. Then you got Fubo. Fubo into live TV streaming platform for the sports events and whatnot. Stock has been selling off of late. Here, as you can see here, even though stock is selling off, on the balance volume is going up. So this is a sign that tells you can accumulate here, and this can cause a short squeeze. And with Fubo, you also have a positive sales growth. That's why it tells you fundamentally it's a good company, it's making money, there is a revenue acceleration. And the last but not least is IIVI. As you see here, stock has been selling off, especially after the earnings. On the balance, volume is also down but ticking up. This company is into semiconductors. They do compound semiconductors and photonics. I think it's a good company. Stock has been punished too much at these levels. I would buy some IIVI. Fundamentally good company. If you're a fundamental investor, look at the sales growth here, pretty steady eddy, and they got a nice market cap 6 billion. And as you see here, they also have a good sales, 3 billion in sales. So it's a fundamentally good company. Right now, stock came down after the earnings. I would buy some IIVI at these levels and hold on to it. So with that, you might ask, hey, how do I trade these heavily shorted stocks? What I would do is really I would look for RSI or relative strength index, and if it is below 50 or 55, and if the stock is recovering in the shorter term, for example, 1 day, 1 week, or 2 week, and sold off in the longer term, those are the stocks that interest me. I will look at those stocks and look for stocks that are consolidating for a while and showing some sign of bullishness in the near term. That tells you this stock can take only so much and now it's trying to go up. And look at the stocks with a huge drop. Maybe it's the earnings miss, maybe it's the FDA issue. When it drops so big and when it's showing some signs of bullishness, that's when you go in and buy some of the stocks. Typically, it's good to not to catch the falling knife. Instead, wait for it to bounce a little bit, consolidate, then you can get in. And look for high short ratio greater than 10%. All the stocks I covered do have short ratio higher than 10%. And also look for insiders or institutions buying the stock. That's why I added those two row columns here. The moment insiders are buying the stock when their stock is down, that tells you something. That tells you insiders have conviction, they know more than us. So it's okay to buy with the insiders or even big institutions when they're buying the stock. And also, if you're a fundamental investor, Look at the fundamentally good companies. Look for a nice sales number and a positive sales growth and good gross margin. So these stocks, you don't need to worry too much. When they're down, when there is a high short ratio, you can buy them, and you don't need to play the game of always watching every day. You could hold them for a while and sell them for a good pop. And then we got these secular biotech stocks. They go down many times because of a bad FDA news, or it may be a hot tech stock. Maybe it came down because of some reason. Maybe it's an earnings miss. You could buy those stocks on this big bad news. When the short ratio is high and when they're consolidating. So these are the things I look for when I buy heavily short stocks. That served me well. So with that, thank you very much. Happy investing and trading. Please subscribe.